Hi traders, welcome to this Bank of England rate decision and pound US dollar analysis. Today we're going to be discussing the Bank of England, we're going to be discussing the rate decision and what's to come. So in today I'm going to be discussing what is the Bank of England, what the central bank looks for in determining rates and the expected result of the upcoming rate decision. We're also going to cover some seasonal analysis, the current trader report and pound US dollar analysis. Now, what is the Bank of England? Well, like other central banks in countries, you've got the Federal Reserve for the US, while the Bank of England is the Federal Reserve's version in the US, in the United Kingdom, and they make monetary policy decisions. They regulate banks and financial institutions, and they have a monetary policy committee made up of 9 members, which is led by the Bank of England Governor 𝖢𝖥𝖣yi, and we have a voting system that we will discuss in an upcoming slide. So what is the central bank monitoring? Well, one of the things that it's monitoring is the inflation rate in the UK, and the inflation rate in the UK rose to its highest level in 2022 at 11.1%, and obviously that then forced the Bank of England to hike interest rates quite aggressively to try and bring the inflation rate down. That's one of the tools that a central bank can use in fighting inflation, is by either hiking interest rates, or if there is a period of low inflation, they cut interest rates and hold interest rates at a low period in order to try and bring that inflation rate up. You can see here back in 2021 we were very close to zero before we started to see a very aggressive move higher till that peak. The current inflation rate as it stands in March was 3.2%, and the BOE's target rate is around about 2%. So there's usually this sort of band within the area that the market kind of wants to stay within, and it's between that sort of 2 to 0% area, and obviously we're above that target at the moment. We're above the sort of Bank of England rate target of 2%. So that's something we also have to consider, is that we are above the 2% targets at the moment. So the likelihood of a rate cut in today's meeting is slim. However, I do feel like the Bank of England are close to potentially cutting rates. The other factor is employment. So employment figures in the UK have rose to unemployment, has rose to 4.2% in February, and this would factor into inflation. You know, less people working would lead to less consumer spending, and essentially less consumer spending is less demand for goods or services, and that reduces inflation rates. Okay, now we did have a period of sort of low unemployment between 2021 and 2022, and that had a sort of concurrent effect on the inflation rate. We can see that the inflation rate in 2021 and 2022 rose as that unemployment rate declined. So more employment, more consumer spending, and that can lead to higher inflation rates. Okay, so they want to see this continue to be reduced in order to bring that inflation rate down. Now, technically the UK was in a recession. We are expected to come out of that with the latest GDP announcement coming on Friday. We can see that we had minus 0.1% and minus 0.3% in the final quarter of 2023. Like I said, 2 quarters below zero technically form a recession in the market. Lower inflation and higher consumer spending could be on the cards, as the fact that inflation has come lower, and that could uplift in GDP on Friday. So what's the data we have coming up? It's the Bank of England interest rate decision, as well as the BOE Governor Bailey speaking and GDP. Now, what we do get is a release of the MPC committee votes as well, and we are forecast to actually see 009. So I'll put a little note here just to show you what that is. The first number is how many MPC members voted to increase interest rates. The second number is how many voted to decrease rates, and the third is how many voted to hold interest rates. So what we had previously was one member wanting to decrease rates while 8 members wanted to hold rates, whereas forecast is actually suggesting that all members are going to vote that way of holding interest rates. And what does that mean? Well, to me, that's a little bit more hawkish in tone, because that is telling me essentially that no MPC member votes to cut rates right now, and I don't feel like we're going to see that. I feel we'll still see a 018. There are a couple of dovish members within the MPC committee, so I would be surprised if we were to see a 009 here. I'm expecting the 5.25%. That should be held, as inflation rate is still above 3% at the moment. But that could be a little bit hawkish, and that's what I think the market is going to have a little look at. How are the members voting? Does that mean that the rates are going to stay higher for longer to try and really bring that inflation rate back down? Going on to some seasonal analysis then. Seasonals, data shows an average of movement over the past 20 years, and May typically sees a top in pound futures, and this can last until October. So what I've got here is a pound futures chart, and the blue price line here is an average price movement over 20-year period. You can see here 20-year time frame ranging ending in sort of 2023 there. So what I'm looking at is how does pound particularly perform during the month of May, and usually it is fairly bearish. We usually see a little bit of a move to the downside, and that usually lasts until July, where we see a sharp rally where we form a high in August, and that can last all the way down to October. So over an average of 20 years, the pound has been bearish through this month, which is quite interesting considering the sort of topic that we're talking about today, especially because we've got sort of an inflation rate coming down, higher unemployment as well, and a GDP that has been fairly low. So a lack of growth. So those would tend to lean more towards the negative side of things, and that's also reflected in a 20-year average here on the seasonal data. Now, the Commitment of Trader reports, love using Commitment of Trader reports, known as COT reports as well, and essentially they tell us where the large players are positioned in the market. So the red line, okay, down towards the bottom of the screen, is commercials. Okay, now commercials are in the markets for business purposes, so they're looking to hedge price essentially. Okay, now there is a green line down there as well, and the green line are what those known as non-coms or trend-based traders. Okay, so basically those are in the market to make money from the market. They're investors, they're hedge funds, they're large traders trading the market. And you can see that there's a blue line as well, but that is the non-reportables. We don't tend to focus on this line, but what I tend to look at is the extremes. Okay, and the difference between the comms and the non-comms. Okay, now what I mean by that, if we take a look at the chart below, you can see that there's a couple of different things. So I like to look, like I said, at extremes. Now, we actually had an example of this most recently back in March here of 2024, March, April time. I was looking to short cable because we actually reached an extreme level of selling that we had seen previously. So if I just mark a little note in here, we can see that the commercials were selling pounds aggressively as price rises, because they're in the market to hedge. They're in the market for business purposes. So as prices rise, they sell their pounds. As price falls, they buy pounds, okay, to hedge the risk. risk. So when they get to an extreme, though, we can often see a little bit of a sort of topple or a little bit of a top in the market or a bottom in the market. So this extreme here was a heavy short extreme, and we can see that price came towards 1.3 and it sold off. Okay, so what we can see now from the commercials, in fact, is that the market is now heavily buying. Okay, what does that tell me? Well, it tells me that price is moving lower. They think it's cheap. They're buying aggressively. The green line, the non-commercials, they are trend following, that they are selling with price moving lower. So I need that to reach an extreme again, and the last sort of extreme that we had was back here in September of 2022, and obviously that got to a sort of buying point where we started to see a huge move from the market. So I want to see commercials buying very aggressively. I want to see non-coms selling as aggressively as that time as well. So you can see selling on non-coms. We haven't really seen that type of selling since June 2022. So I want to see that. I want to see them come into extremes, very much like what we had recently back through here in March. And if we do see that, I want to be then looking at a potential bottom in the pound price. And you can see maybe around this 1.2 level could be a good area. You know, arguably you can maybe set out a little bit of a zone there that price could potentially come into. So maybe sort of 1.23 down to more sort of 1.2 could be a good level to be a buyer of the pound again. So in the short, we could be looking for some downside risk at the moment. That is reflected here on the chart. We can see that the market is made on this weekly chart of pound US dollar. We can see the market has made new lower lows and lower highs, and we're currently trading below the sort of 126 handle. Okay, so if we hold below 126, I feel like that could be a good for price, you know, in terms of selling pressure. If we break above 126, I think that maybe we could see a little bit more upside, and maybe we have to kind of change our bias in the near term, and price may go and seek 1.29 or even the 1.3 handle, which is a previous monthly level of resistance. But I think if price holds below 126, I think the buyers will kind of leave this, and sellers will continue to push price lower. Like I said, recent weekly lows around about 1.23 could be targets, maybe even 1.21 and 1.2 if we were to see this low breach and the market come down towards a level like that. Going on to the 4-hour time frame then, so I like the idea of price kind of changing trend. So what I mean by that is basically if the weekly is in what I call a primary phase, I would expect lower highs and lower lows out of my 4-hour time frame. Okay, 4-hour downtrend. If it's in the secondary phase, I would be expecting a bullish trend out of the 4-hour time frame, and that's what we've got here. We were in a primary phase, secondary phase. Now we're asking ourselves, is this going to be the primary phase? The market makes lower lows and lower highs. The market makes higher highs and higher lows. Now the real kind of low area is down towards this area that I've marked out here of 1.2466. And I feel that if we breach this level here, then that could be a good option to see price continue to push to the downside there towards that 1.23 handle or 1.2350. So that's all I've got for you today. Thank you for watching the video. I hope you enjoyed it. Let's see how the announcement comes out, and I'll speak to you soon.